Those are all the top headlines that we are tracking from the world of commodities. But the big story today, of course, is gold, because gold continues to shine bright, not only in the domestic market but in the global markets as well. Gold prices on COMEX have now crossed $3,100 per ounce. This is the highest ever that we have seen, and several reasons aiding the move in the yellow metal market. Remember, after the solid 27% surge that we saw in calendar year 2024, gold is up another 18% this year so far. What a stellar run it has been for the yellow metal. But as I mentioned, several factors leading to the move in the precious metal market, not only for gold but for silver as well. We'll talk about that in just a bit. But remember, central banks globally continue to purchase gold. Geopolitical tensions continue to escalate. Several factors aiding the move, and that is the reason we have seen that stellar 18% move on the yellow metal this year so far. But in an exclusive conversation with ET Now, Sairam Mehra, former chairman at GJC and director Unique Chains and Jewels, Ashish Pete of Vaman Hari Pete Jewelers, and Vikram Dhawan from Nippon India Mutual Fund discussed the recent rally in gold prices, the factors driving the surge, and how they expect the yellow metals price to shape up going forward. Listen in to what they had to say.
Particularly if you talk about 2025, gold started with a bang, and the main driver now, so far, in the first 2-3 months, is the investment demand through the gold ETFs, especially in North America, which has come back after 4-5 years. So I think that various factors, and obviously investors right now are buying because of so much of geopolitical, geofinancial, uncertainty. That's why they are buying. So I think we'll have to wait and see that what factors play out in this year. But definitely investment demand, which was dormant for the past 5 years, just to give you an idea, the ETF holdings in the past 5 years have come down by 30-35%. And so we have seen that ETF flows coming back. Now, how much of these ETF flows will take up the slack from the physical market? Because obviously at higher prices, you'll see some demand destruction. It remains to be seen. But again, if it's a 4-cylinder car, 3 cylinders are still firing for gold.
Aspect, which is silver. Historically, I have seen it, and you've seen it, and all of us have seen it, that gold and silver, you speak in the same breath, Sona Chandi. But silver has not gone anywhere. Gold is going up. Mathematically, can I say that next 3 years silver will give better returns than gold?
Interestingly, last many years, there has been talk that silver will always outperform gold. That has always been the case. And I agree with Dhawanji that 4 cylinder mein se 3 cylinders will always be supporting gold. But it is the central bank buying which has supported gold, and that's where the dissonance is there.
Here's some data which is that silver does well when there is growth in the world. Gold does well when there's uncertainty in the world. Silver is highly volatile, but it's like equity market, keeps on going up and down on a longer term basis. Any volatile asset, if it is productive, it'll always create more wealth. So that same question. And I'm sure this question has been asked to you. What to buy, gold or silver?
As an investment for long term, still I would be very bullish on silver.
Okay.
As we've seen silver reaching $50, it has touched the high of $50. Now it is $33, $34 only. I see maybe from a 99,000 or 1 lakh rupees of silver increasing to 1,35,000 by the next year end. क्योंकि जो सोना या चांदी है, सोने की रैली यहाँ तक आ गई है, चांदी की अभी बाकी है। और 10% या 13% अगर मैं सोने के अंदर देखता हूँ तेजी नेक्स्ट ईयर के अंदर, चांदी के अंदर 30-35% अभी भी मुझे दिख रही है।
That's the word coming in on where gold and silver prices are headed, but what a rally it has been for precious metals, isn't it? But to discuss this in greater detail, we now have Mr. Anindya Banerjee, Senior Vice President, Head of Commodity and Currency Research at Kotak Securities, now joining us. Mr. Banerjee, thank you so much for taking your time out and joining us. And let's take that discussion forward. We just heard a whole host of experts talking on where gold prices are headed. But first up, you tell us, we've seen a strong rally this year so far, up 18%. Do you think there is more steam left in gold, and what are your thoughts on gold versus silver as an investment opportunity?
Thank you for having me. A very good afternoon to everybody. See, gold has been, first we have to understand why this demand has come and what is the principal factor which is driving the central bank demand. And also that there is very strong demand from institutional investors globally. If I have to describe this in one word, I would say it is de-dollarization, where we are heading towards a new financial world order over the next 5 to 7 years. And that's the reason why the central banks are acquiring gold, which is basically the how money has been since eternity. So it's basically moving towards the universal money as an anchor for the global monetary system. That's the reason why this accumulation of gold has started from 2014, 2015 onwards. So yes, gold can continue to do well over the next, let's say, 7 to 8 months, and it is quite possible that in dollar terms we could see levels of 35 or 3600 or even more in the coming months because. See, in one hand, we are also the de-dollarization is also going to lead towards de-globalization, which we are seeing the effects of it because of this the trade war between America and which is expected to intensify in the coming days with China. So all these factors would continue to support gold prices. Now coming to silver, see, silver is basically a dual play with gold as money and also industrial applications. So it is also has a huge impact from the industrial metals like copper, zinc, etc. So the silver continues to be very attractive at the current levels because if you look at the gold silver ratio, it is at levels from where silver can outperform. But having said that, one thing we have to keep in mind is that over the next few months, we are anticipating the trade war to intensify between America and China. Now that can lead to a situation where we can see sustained risk off in the financial markets. If that were to happen, silver can have some more time of underperformance with respect to gold. But if I look at, let's say, 18 to 24 months down the road, then silver actually has a lot of catch up to do. But over the next 6 to 9 months, gold may outperform silver.
Outperform silver over the next 6 to 9 months. That's the word coming in, and you've given a very ambitious target of $3,000 per ounce over the next few months. But there are also reports on silver which suggest that short squeeze might be happening. What is the buzz all about as far as short squeeze in silver is concerned?
See, silver, it's basically the demand supply of silver is such that there is no pure silver mine in the world. It comes out as a byproduct from copper, gold, etc. Now, this market is small. So whenever there is a huge surge in demand, because as I said, that silver market finds a lot of application, not just in the jewelry sector or as an investment as a currency, but there is wide application in the industrial sector, the EV sectors, the new emerging sectors. So in that, what has happened, the silver market has gone into a deficit over the past few years and is expected that over the next couple of years that deficit can continue. In such a situation, if the demand for silver rises, especially from the investment standpoint, like what has happened for gold, then we could see a short squeeze come into the market. And historically, we have had some two mega squeezes in silver. One was around the 80s, the 1979 to 1980, the Hunt Brothers squeeze, which took silver from less than $10 an ounce all the way up to $50 almost. Again, we saw a repeat of that in 2011, which is where some of the investment banks had short positions and got squeezed. So that again took silver to $50. So a similar squeeze this time too can take silver prices much higher. And over the next 18 to 24 months, I won't be surprised if that $50 mark is retested in dollar terms.
So you're positive on both the precious metals, gold as well as silver. $50 per ounce is the target that you've given for silver over the next few months. But also wanted your thoughts on reciprocal tariff and the commentary that is expected to come in from US President Donald Trump tomorrow. What kind of impact do you see on other commodities barring precious metals? Any kind of impact on industrial metals? Do you expect the prices to inch higher going forward?
See, the reciprocal tariffs is a very fluid situation. We have to understand. It's not really an event that it's being made out to be, because he has been quite flexible on which countries to impose tariffs, where, how much, and all that. And that's the reason why the impact on industrial metals have already played out. Because if you look at the copper prices, they have corrected by around 3 to 4% over the last 1 week or 10 days. The zinc prices have fallen, the aluminum prices have fallen. So, but the bigger threat to the industrial metal space can be from the escalation of the US-China trade war. And that's something which we are expecting over the coming months, because see, his whole America First policy basically is going to pit him against China, because right now China is the sole factory of the world and also supplying to America, right? So if he's going to take a chunk of that manufacturing back home, the trade war has to escalate significantly. So that will be a scenario which can have a negative impact on industrial metals. But right now, if I look at the reciprocal tariff scenario, yes, it is negative, but in a way, it can be positive for metals like copper, because if the tariffs are imposed on copper imports in America, we could continue to see metal being drawn from the world market into America, and that can create a shortage of copper in the world market, and lead to a surge in the prices. So it is kind of mixed bag. For copper, it is positive. For zinc and aluminum, it can be a little negative because it can hit China. But eventually, we have to watch, as I said, the US and China trade war, which we expect to escalate significantly in the coming months and quarters.
So the trade war between US and China could escalate going forward. That's the word coming in. And copper, remember, has risen nearly 11% this year so far, and several other commodities. Nickel is up 4%, lead is also up 3%. But also wanted your thoughts on crude oil. There are reports which suggest that US could curtail crude oil shipments from Russia, and that has led to the surge over the last 1 or 2 days. It is now touching that $75 per barrel mark. What's your outlook for the rest of the year as far as crude oil is concerned?
See, for crude, if you look at the price action in Brent or WTI, let's take WTI to understand, because that is what we trade on MCX. So it has been oscillating between 65 on the down and 75, 80 on the up since 2021. So every time it comes down to $65 or $66, it turns back. It could be a geopolitical tension, it could be something else. This time around too, it came down to 65, 66, and we saw this headlines around Russia, the sort of murmur around the escalation between Iran and Israel. So all these things have raised the geopolitical premium in the oil prices, but we have to understand that the demand supply situation in oil remains in favor of supply, which means that the overall market is well supplied. There is no actual shortage. Yes, we have threat of disruption, like especially Iran, Israel. As far as the Russian sanctions are concerned, we have to wait and see how it comes out, because we have seen n number of sanctions since 2022, the war started, but it has not really disrupted the actual flows of crude in the market. So I would say that crude is going to be ranged 66 on the down, and let's say 75 to.
Well, yes, so 66 to 75, that's the range where you expect crude oil prices to trade for the rest of the year.
If you like this video, then like, share and subscribe to ET Now.